I've been shaking my head a lot, quite frankly, the last 36 hours. And I think first thing I'd say is, Michael and Brad, shame on both of you for falsely accusing literally thousands of people and possibly scaring millions of investors in an effort to promote a business model. Now, Sue, it's a very, very old tactic to try to build a business on the planks of fear, mistrust, and accusation. This has certainly taken that to a new level. And it reflects either a continued lack of understanding about how the market operates, or just an unwillingness to acknowledge it because you're trying to launch a new business and you want to get volume to your platform.
Brad, let me try to weigh in here, Bill, and we want to get more on what you thought. You're very respected on the street. I've known you a little while. You're thought very highly of. Do you think the markets are rigged?
I think it's really hard to put a word on it.
He said it in the book. Okay, you said it in the book. That's when I knew the markets were rigged. And it's disgusting that you're trying to parse your words now.
Do you
can't say that.
You are quoted that way in the book, but
let's walk through an example.
Do you believe it or not? Because you said it.
Let me walk you through an example.
It's a yes or no question. Do you believe it or not?
I believe the markets are rigged.
Okay, so there you go.
And I also think that you're a part of the rigging. So if you want to do this, let's do this.
I really do.
So let's walk through. He's talking about the technical operation of an exchange, right? So when you look at an exchange or a dark pool, the responsibility of that venue is to fairly price trades between slower participants and faster participants, right? So you have some participants have microwave towers, some participants are co-located. Some participants are not. They're trading over an internet connection. They're slower, and you'll never bridge the speed. The battle's not between fast and slow traders. In order for a disadvantage to happen, in order for someone to get scalped, the fast and slow traders have to trade against each other. That trade happens on a market. Okay, it's the market's responsibility, or at least it should be the market's responsibility, to fairly price trades between fast and slow traders. How does it do that? It does that with its understanding of the broader market, the information that the exchange is taking in to fairly price trades. Right. My question to Bill, if he's launching these accusations,
I'm launching accusations.
What market data do you use to price trades on direct edge?
We use the direct feeds and the SIP in combination.
No. I asked you a question, not what you use to route. What do you use to price trades in your matching engine on direct edge?
We use the direct feeds.
No.
Yes, we do. And let me talk. Look, you had a 300-page commercial, okay? So let me talk. Let me talk for a few minutes, okay? The direct feeds.
You respond, and then you respond, and then
sure.
Michael, I want you to weigh in.
We're going to bring Michael back in a minute.
Yeah.
The direct feeds that you're talking about, that you're claiming is the source of this vast inequity, okay? 96% of the volume executed on our system is by customers using those data products, and that runs the gamut from bulge bracket firms, retail brokerage firms and their advocates and intermediaries. You don't understand that a market has always had intermediaries. Since the beginning of financial markets at scale, there's going to be someone who at the time needs to be in the middle. They're using technology to manage the risks of providing that service to the market, and we help them and other types of brokers and investors use technology in a way that's consistent with their business model to manage the risks and the desires of their customers.
Can I tell you whether this is incorrect?
This is 96% you're referring to is the proprietary feeds that you're saying that everybody's
right.
been arguing about.
So Brad, and then Michael.
There's a difference between a subscriber using a proprietary feed versus what a pegged order, a priced order, price sliding, anytime the exchange is responsible for pricing.
You use the same data that we do.
Absolutely not. You guys use the SIP to price trades in direct.
That is not true.
What is the SIP? For those who don't know,
it's a consolidated feed. What I'm saying is that the exchange's view of the market is slower than that of some of their fastest participants. Their view of the market is slower. They're looking at a different price than the fastest traders.
And therefore, some investors are at a disadvantage.
In concert, when you allow co-location to occur, your ability to fairly price trades is diminished. You can't do it because you don't even know what the market is.
BATS uses direct feeds, NASDAQ uses direct feeds,
as of a month ago.
Feeds.
All right, let me jump in if I might,
BATS
gentlemen.
uses direct feeds.
Can I finish just 1 second?
Yes,
okay?
please.
What IEX has done, we use direct feeds to price trades. We are not as fast as the fastest HFTs. What we've done is we've slowed down HFT's ability to react on our exchange, which means that if anyone in this room, if anyone at home, if a mutual fund or a hedge fund gives an order to IEX and it's our responsibility to price it, HFT cannot make that order.
They have the same HFT customers that we do, only we say they're providing a valuable service to the market.
Let's just try to change
they say they're ripping off the market.
Brad, you want to be an exchange. You aspire to be an exchange, is that right?
Yes.
Do you think you have a model for how you want your exchange to run? Do you think all the other exchanges models should be legislated out of business? There should be a law against them?
No,
what do you feel should happen?
to say that someone's not allowed to sell a microwave tower, I don't think that's it's capitalism, right? I think to render a microwave tower irrelevant is exactly what we're trying to do. It's not about technology legal versus illegal. It's about the market providing a solution. Again, just to respond to what Bill just said. Do we have computerized trading on our market? Absolutely. I think the word high-frequency trading should be eliminated from the industry vocabulary.
You used it 20 times in the book.
There's computerized trading.
It's not his book.
There's computerized. Yeah, it wasn't my book.
You're quoted.
Computerized trading and computerized scalping. People can trade with computers. They will till the end of time. People use computers to scalp. They've always looked to game the markets. You cannot scalp trades. You cannot scalp orders that are on IEX. So what we're saying...
Okay, guys, I'm going to jump in, folks. I'm going to interrupt for a minute. I want to bring Michael Lewis back in. You've been sitting...
Me?
Yeah, you've been very patient there.
I'm enjoying that.
I've seen your... I could tell you were enjoying it, and it sometimes got a little bit of a pained expression on your face. I want you to react to what you've just heard.
Well, I'm just going back to the very beginning. It's great to see Bill instantly throw at Brad the idea that he's doing all this to promote a business model.
Well, he said that, and he also said, shame on you. How do you react to that?
So,
say it again.
So I think he's outrageous. I think he's part of the problem. I think he's not just Brad. There's an investor in Philadelphia named Rich Gates who managed to get himself picked off on the BATS exchange numerous times because the BATS exchange didn't update their prices fast enough. So this isn't just Brad Katsuyama talking. But what's great is that, like, the story, so Brad is now kind of cast as this troublemaker, right? And I'm partly to blame for that. But this trouble found him. This is a guy who could be very happily being part of the problem. He was being paid lots of money to work at a big bank and be part of the problem if he wanted to be. What he's actually trying to do is solve a problem that is at the heart of capitalism right now: the unfairness in the public exchanges. And he's taking great risks to do it. Yeah, he'll make some money if it works out, but the instant questioning of his motives is kind of incredible.
Mike, I want to go back to this final point here before we go. Should we have hearings around Reg NMS, this law, this regulation that came in 2007? I've been saying that the SEC should conduct public hearings into what is working and what is not working. They haven't done that yet. Would you support something like that?
Well, so look, this is what I think. That the regulatory process always seems to generate something that ends up being gamed by smart people. What I love about this moment right now in market history is that you have this exchange that found a market solution to the problem. And if people just get out of the way, the important thing is that investors get more information about how their stock market orders are being handled. That's a big problem.
Are you an investor in Brad's exchange?
No.
Michael? I'm just asking for full disclosure. Call me Cookie.
Not.
I'm being a journalist.
Are you insane? I'm not. I'm trying to do my job. I didn't even go looking to write a book about him. I was just trying to figure out what the hell was going on in the stock market. And big investor after big investor said, there's one guy who's an honest broker in all of this. He's come into office and explained how all this works. And go talk to him. He's the only guy on Wall Street who can actually tell you the truth about how the stock market works.
You're not insane. And what I take the biggest issue with is BATS, Direct Edge, they didn't exist 10 years ago. And we became the biggest stock market in any given day in the United States by going to our customers, proving we had a value proposition, and winning their business. We didn't do it by trying to scare people. And I don't think it's true, and I don't think it's right.
What about Bob's question about the SEC revisiting NMS and the rule that really created the current market structure that we are now all kind of grappling with, for better or for worse? I applaud both of you for trying to do, to run your businesses. But do we need to re-examine the market structure?
I do agree with Michael that I think it's time to do that. We've actually called for a holistic review of market structure for a couple of years. And Mary Jo White, Commissioner Chairman of the SEC, and Dan Gallagher have made statements recently that they're prioritizing that. I think that's a good thing. But it has to be done in a constructive way that listens to the perspectives of all market participants, don't view what they're doing as inherently corrupt, and focus on data and analytics, not accusation and misinformation.
If Michael's right, and your model you think is the superior one, what's the phone calls looking like? Is your business picked up noticeably? You're a very tiny little slice of the market.
We're small.
We all know that.
We're a startup. There's been thousands of calls. People have responded positively. Just back to the the investor confidence. I mean, you've gone from 65% households owning equities to 52% over the last 6 years, every year declining. The S&P tripled since the lows in 2009. So
trading at TD Ameritrade's at an all-time high in February and March. So I dispute that.
Michael Lewis, did you talk to Mr. O'Brien as you reported your book? If so, what did he tell you? If not, why not? And what would you like to ask him right now?
So first, this market confidence point, I will answer that question. The market confidence point is interesting because Goldman Sachs is now has now thrown its weight behind Brad Katsuyama.
It's amazing because you use Goldman Sachs as
let me finish this.
No, you had 300 pages. You let Goldman Sachs' investment in my exchange as a sign of corruption, and his backing of his exchange is a sign of virtue.
And you didn't call me. There's a difference. Say the same thing.
Why is there a difference? Because the backing of me is bad and the backing of you is good. How is it different?
Because they're a financial. They've invested in the investors in our exchange don't trade on our exchange. This is part of the problem, right? I mean, Bill, again, I say the sky's blue, Bill say the sky is red, right?
This company, this building was owned by people who traded here for 200 years.
Is he always like this on the show? This is insane.
What you say is insane.
All right, let him finish, and then you get a response.
Bill's talking his book, okay? He is owned by intermediaries. He's owned by HFTs. I'm talking my own book, right? We're owned by mutual funds, hedge funds, et cetera, right? So it is one of these things where, at the end of the day, what is the purpose of the market? Why are all the people in this room, right? They're in here to help companies raise capital and to help investors allocate that capital. Do intermediaries play a role? Absolutely. Should you build a market specifically just for intermediaries? You shouldn't. So we have the buy side behind this. We have brokers like not just Goldman, but Morgan Stanley or JP Morgan or Bernstein or RBC. You have people in this room. You have computerized traders like Virtu that aren't coming here to scalp people. And you have the general public behind a solution. Like, what are we talking about here, right? It's about the industry getting behind a solution. That's exactly what's happening. So
I'm all for people competing. We started from nothing 10 years ago, just like you're doing now, and that's fine. And you're right. The purpose of exchanges is to bring together buyers and sellers in a way that works for them. But
Michael, jump back in
what
here.
we're saying is it's not a zero-sum game. Everybody can win, and you don't need to build the market on the premise that one group is ripping another group off.
Michael, go ahead.
So I missed most of that. I didn't hear it. I didn't actually hear the exchange. But so I don't know what I'm jumping into. Sorry.
Well, I asked you earlier, did you speak to Mr. O'Brien in the reporting of your book?
So I visited Bats. I interviewed people
you did not. That is false.
That's not false.
Absolutely false.
That's not false. I toured it. I had a tour of the place.
That is untrue.
What do you mean it's untrue? I was there.
Give me a date. What date?
February 5th.
February 5th, what year?
2013.
Okay, we're going to follow up with CNBC about where Michael Lewis was on February 5th, 2013. Were you in Kansas City or New York?
I was with Brad Katsuyama when I visited.
You can't hear them.
You were in Kansas City on February 5th, 2013? Because that's where we're located, by the way, if you wondered about it.
I wanted to see where the high-frequency traders hooked up.
Look, you go to a data center. Going to a data center and standing outside and saying you talk to us is not the same thing. Okay, so be honest with yourself.
So the other thing so the question was, there's actually no point in talking to someone who's just throwing dust in the air, and he wasn't actually the head of Bats when the stuff I was describing occurred. I tried to get to Dave Cummings, who was one of the founders of Bats, because I was curious why they positioned it outside the Lincoln Tunnel. I mean, Brad Katsuyama discovers that he's being front-run from Bats to other exchanges. That's what gets him involved in this in the first place, and in this kind of journey of discovery to figure out how this market works. And so I was curious if they had intentionally put the exchange on the other side of the Lincoln Tunnel just so they could pick off orders.
Just stop manipulating the audience, because talking to an ex-employee is not the same as saying you talk to us.
So the person who, you weren't even there at the time. So the person who I wanted to talk to, he wouldn't talk to me. But I did talk to
You didn't try to contact anybody
at
Bats, okay? The answer is no. You didn't try to contact any employee of Bats. And your book is riddled with inaccuracies for that and many other reasons.
It's not true. It's not true.
Again,
you can get on there and you can shout all you want, but it's just not true.
So you have a much bigger soapbox than I do.
Traders. I interview people from all the exchanges.
To that point, though, Bill.
I interview people. I'm sorry.
No, to that point, Bill, though, he does have a very big platform, which I mentioned earlier. And this book is getting an awful lot of media and an awful lot of press. And for better or for worse, it doesn't make some of the high-frequency exchanges look good. So how do you combat that? How do you clear the air? How do you forward the conversation? Because once Flash Boys goes to the general public, which it is going to do shortly, and once you have, as Bob Pisani said, the megaphone of 60 Minutes, it becomes a Main Street topic, right? So how do you combat what is going to be a negative image for your company and for your industry?
Let's start with the facts. And I think David Kaminsky put it really well a couple of hours ago, right? 15 years ago, the spread between the best offer to buy and sell was 12 cents or 25 cents. Now it's a penny. 15 years ago, what an institutional investor paid Brad at RBC to execute his trade was 6 cents. Now it's 90 to 95% less than that. So I think a lot of people who really focus on the data, which really doesn't exist in the book, will understand the benefits of electronic trading generally, how it's taken a lot of risk out of the system. But that doesn't mean the market's perfect, right? Saying it's not rigged and saying it's perfect are not the same thing. And we did need a wake-up call from the flash crash. We had not invested in the technology to make our critical infrastructure more resilient, to manage the complexity. And it is complex, but you know what? The internet's complex. A factory is complex. There are ways to manage that risk. We need to work very hard to do that.
I think that's a very interesting point. When you say the market is not perfect, there are imperfections in the market. And Brad, that's sometimes called an edge, right? That's how hedge funds and pension funds and other companies make their money on the trade, right? On that edge, on that difference.
No, it's about if you're providing a service, right? There's never going to be a market that's only natural buyers and natural sellers, especially of very, very large shares. So you're going to need an intermediary to help cushion the blow, right? And that is a service, right? And you know what? It's a service that people deserve to get paid for. They used to get paid for it by earning a quarter a share or charging 6 cents a share. You know what? Now they get it by earning a tenth or 100th of a cent a share, and that is a good thing. We've taken risk out of the market. People don't need to rely on the balance sheets of the Bear Stearns and the Lehman Brothers anymore. They can use this technology to manage the risk, and that's a good thing.
But Brad, you're not against intermediaries. You're not against people who charge a penny for their services. People have been doing that for a long time. I don't want anyone to misrepresent your position. You're not saying that there's something
in the book. He says he wants to build a market without intermediaries, except for him. He wants to be the only intermediary.
Let me ask
we're not even a broker.
You don't ask.
You are a broker. You run an ATS.
If you have a market,
are you a broker dealer?
Are we a member?
Are you a broker dealer?
Do we trade on our? Do we
are
trade
you
on
a
our
broker
market?
dealer? So again, yes or no question. You are a broker dealer. Okay.
The
answer is look it up on
website. Let me just ask the question.
We don't trade on our own market. Okay. Can we just clarify that before Bill ruins? We don't trade on our own market.
You have a model that you think is better than other people's models.
Yes.
You don't necessarily believe, though, that everybody else should be banned. For example, you don't think that if somebody wants to charge a penny to provide some kind of liquidity, phantom or not,
computerized trading is probably the only time Bill and I will actually agree. Computerized trading has delivered benefits to the market.
You're for competition, and you believe your model is superior, and you will win out.
Yes, and again, we're not.
Just don't say everybody else is corrupt but you.
We're not saying that either, right?
You said it's rigged. Do you know what that means?
Well, let me go back to this.
Why are you trying to summarize all of this? Why are you trying to summarize the entire market in one word?
Because you started 60 Minutes with it.
Michael, let me just ask you one thing about this.
I started 60 Minutes with it?
Yes, you did.
Michael,
did I produce 60 Minutes?
Let me just ask you, Michael.
What are we talking about?
Yeah, I think a lot of this concern here is with the emotion that has been generated by the term rigged. And the average person watching the 60 Minutes show, I know my wife turned to me and said, honey, is it safe to invest in the stock market? It's rigged. And I'm sure you didn't mean that, but are you willing to clarify the idea that it is safe to invest in the stock market? Because that's what a lot of people came away thinking you were saying.
That was the question I asked in the beginning
it's
of the
a really
show.
simple thing. The book lays out the story very clearly. Go read the book, and you decide whether it's rigged.
All right. You know, Brad, do you worry, though, about the use of the word to Bob? I asked that question of Michael at the beginning of the show. You were quoted as saying in the book that the markets are rigged.
He said it again here.
And you did say it again here. But the implications of that is worrisome to me. I take your point. I read the book. It's a brilliant read. But are you worried that you are going to convince Main Street that they have no role in a rigged game? We don't have the retail investor back yet.
I think it's exactly the opposite, right? People want to know the truth, right? So when the flash crash happens or Facebook happens and then people like Bill show up on TV saying the market's great, it's never been better, and blah, blah, blah. That's where people.
Not what I said.
That is where people lose confidence in the market. People just sitting around talking that everything's fine. Everything is not fine, right? People want the truth. What Michael Lewis did is he lit a torch, okay? It's the industry's job to light more torches and carry them forward. Whistleblowers have been calling us. I mean, things are happening, right? So all you want to do is provide the public with the truth. Everyone makes their own decisions. More information, better decisions. That's what it's about. It's not about obfuscating. It's not about using words. It's not about tweeting about BS. This is just about providing information to the public. Let them make their choices.
All righty.
Bill,
Folks,
Brad, Bob, thank you very much.
Thank you.
Ty?
Lovely.
I'm going to turn back to Michael Lewis for some final thoughts here. And I guess one that pops into mind is, do you invest in the stock market? If so, how? And how, after you did the reporting on this book, has your attitude about those markets changed?
So it's funny. The subjects in the book, when they learned how the market functioned, actually withdrew their investments from the market. I've always been a boring and very conservative investor. I own index funds and I don't like time the market, and I put it away and I don't think about it very much. I think that the story of the book doesn't it doesn't follow from the story in the book that you flee the market. What follows from it is that you try to fix the market. The point is not to incite panic, it's to incite action, reform.
All right, Michael, let me ask you one further follow-up question. In thinking about high-frequency trading, is there anything that you think they do well, that you applaud them for? Are prices lower than they might otherwise be because of the liquidity they supply?
Liquidity, if you hear liquidity, please, you have to, I'm sorry, the word liquidity is so misused. Liquidity is not the same as volume. And you're not really providing liquidity if you're not taking market risk. So I think that's a canard. What I do, the great question, I mean, it's not a question I can answer. I don't think it's a question anybody can answer. Is like, to what portion of the haul of high-frequency trading is generated by essentially scalping activities, and what is generated by just clever strategies that actually do a service to the market by bringing prices in line where they should be. So, and I don't have an answer to that. I can tell you this, that when people go to sell speed to high-frequency traders, when exchanges sell speed to high-frequency traders, when spread networks, the story that opens the book, tries to sell speed to high-frequency traders.
Right.
Not all firms respond the same way to it. Some of them turn up their noses and say, we actually are not that, speed is not that important to us because we're actually adding something. We're actually clever. We're not just like beating everybody else to the prey. So I think that obviously there's some of this stuff is really very useful. It's just very hard to parse it and figure out which is useful and which is not.
We're going to hear from Senator Wyden in just a minute, Mr. Lewis. And I wonder, is there anyone in D.C. who is on your side, and why does Congress seem so silent on this? This book has been out for 24 hours, and I don't know who's on my side and who's not on my side. What I know is the FBI has launched an investigation since the book came out, and the New York Attorney General seems to be very interested in the subject. So
I believe the FBI investigation was going on for a while.
Oh, they announced it. I don't know if it. Yeah, so it was announced yesterday, right? So I can't tell you who is on my side and who is not. I don't really think of myself as having a side. I really would just like a clean and fair marketplace.
All right. On that note, Michael, thank you so much for a lively conversation.
Yes, always a pleasure.